Good morning. Welcome to this week's Wednesday webinar. It's Wednesday, the 6th of September, and we're properly into the month of September with a bit of volatility, most likely. So let us do the disclaimers as usual. Good morning. Welcome to this week's Wednesday webinar. Sorry, I'm just having to mute my YouTube so I don't get an echo of myself in my ear. All Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, let us check everything is good. Yep. I'm just waiting for the YouTube screen to change. I think it's going to change now. Looks like ES is breaking down towards some liquidity, but I'm going to restructure the format of these webinars, and I've just got it on some bullet points here, just so that we make the best use of this hour together. So if I quickly move across to my slide for today. I'm going to break this down so that in the first 15 minutes we talk about education and ideas. I think I've spent a lot, if not too much, time in the first month and a half of these webinars just really focusing on education, especially the supply and demand scenarios that I'll be commenting on live as we have trades that set up. Anyway, so I'm going to limit my education and new ideas to the first 15 minutes only. Sometimes that might even be shorter. The second 15 minutes, we're going to talk about some really clear ETH setups that appeared in today's ETH session. That's the overnight session. The third 15 minutes, we're going to do the prep and context for today's RTH session. And the full 15 minutes, or maybe longer if we're lucky, we will just have live order flow analysis and commentary of this breakfast session as we move towards the RTH. Okay, I'm aware before I go into the first point that we do have some market moving information coming up. So if we go along there, at 8:30 today we have the trade balance. So that's a 2 out of 3 in terms of importance, medium to medium high. So we should get some volatility during our second 30 minutes, if not before. Okay, right, let us move on. Okay, the first thing I'm going to talk about today is ideas. Right, okay, this is just something that comes into my brain, and I just like feeding anybody out there some ideas to help with your own trading. I mean, trading is a business, as I keep saying, but one of the things that I may even spend a whole webinar, whether it's on the Bookmap channel, whether I ever do it on my own channel, about journaling. Journaling is critically important, both in terms of the live timestamp journaling you do during a session, and also the review you do afterwards. One of the problems with journaling is that you may end up taking a heck of a lot of notes, i.e. dozens and dozens and dozens, hundreds of them, and you may cover the same thing again and again. So a question that I have, and maybe it's a question that you've had yourselves, is how do I best connect all the notes, the journals, everything else I've been taken, so that I can find that information again. And one thing I'd like to draw your attention to that is available these days is artificial intelligence, or generative AI. And there are a couple of ways that I have come across recently to do it. So this is basically where you're learning from yourself, which is the best tuition you can possibly get, or you're learning from documents that have been provided by others. You can use an app like Quiver, which is entirely free and has its GitHub page at, or it can be linked from quiver.app to feed it all the documents that you have and then ask the AI questions and get answers about those documents. And the other alternative, depending on what you use for your journaling, I use a program called Obsidian. Again, it's free. I've got all my notes, journals, etc. It's like a second brain. I won't delve too long into that subject here. Um, but one of the ways in which you can query that entire database of your notes inside Obsidian, if you do use something like that, is through the use of plugins. There are a couple of plugins that are particularly useful. One's a ChatGPT plugin, and the other one is a plugin called Smart Connections. So again, you can have like hundreds or thousands of notes. There might be journals, there might be trade plan items, there might be commentary on things that you're learning about the markets, and you can use something like this Smart Connections to ask where have you come across this before within your own notes, and also to have it digest and summarize other things that you feed into that database. So it was just a quick pointer on something that does pique my interest a lot. I mean, I've used AI quite a bit in the last few months, partly on graphics, but also on learning. It's a very useful tool when you are programming. Anyway, let us stop digressing on ideas and let us get back uh, into Bookmap. Right. Okay. Education, or quasi-education as I call it. There's a couple of things that I've been drawing your attention to in terms of things inside Bookmap that can help with the supply and demand type trades that I've been describing, the A, B, and C type um, trade setups. And today we're going to look at something else as well inside Bookmap that I haven't used much. I mean, we've talked about market pulse, but here on the lower panel, we've got another market pulse algo. And if I bring up the menu here, where is it? The one that I'm using here is called volume pressure imbalance. And if we blow this up, I've got the absolute default settings on this. And effectively, it's doing a percentile based on how strong the delta is from its average, say, over the last X minutes. So basically, how strong is this move in terms of delta relative to how delta's been tracking for the last little while. So if we just have a quick look at ES in terms of how this comes up, again, it's exactly the same graphical settings as the market pulse price algo, but this one relates to delta, not price. So that once it's crossed the 70 percentile threshold, it goes green. Once it crosses the minus 70% threshold, it goes red. So in other words, on a strong down move, it goes red. So it's just another way of alerting yourself to mean reversion type trades, I'd call them, or maybe strength of one side coming in and backing that up by putting delta, i.e. buying at market or selling at market as they push the market along. So I mean, if we just scan back and again, I mean, this is partly looking at it from a scalping perspective. As we came up to liquidity here in ES up at the 4495, as we came back up there, and you can see very thin liquidity resistances. It's okay, and you get a clear green delta signal there. It's something I'm not going to comment an awful lot on. I'm just testing it out, and again, since I do tend to reverse engineer and program these things, I've also built one inside Sierra to analyze it. So in Sierra, I'm again having a look at it on a sustained basis of how much delta is being added over X seconds and using a half-life. I mean, if I go back to the settings on this one of the things that does interest me on the way it's being coded is that it has a half-life period, so that the delta every 10 seconds is basically divided by 2 or halved, so it becomes less relevant for the purposes of the graph. Again, it's just something that is worth having a look at, or I like having a look at new ideas to see how best I can use a tool. It may be something that I don't end up using permanently, but it's just something that is on my mind at the moment to see whether it provides more relevant information to the types of trades I take than the market pulse price change algo. The price change algo is very similar to any other oscillator, and I mentioned this previously as well. So for example, if we were going to go through an RSI oscillator or a MACD oscillator, the price change algo is pretty similar to that in terms of extremes, and using them to fade a move or to give yourself a signal that strength is coming into that side. So anyway, that is my first 15 minutes, and I managed to go through in about 11 minutes. So I will move on to our next topic, which is let's find some good setups in ETH. I think I've got over 15 minutes, which will be great because there was a fabulous setup. I'm going to look at this one primarily for NQ and to describe how not to do it and how to do it. Unfortunately, my trading view chart here I can draw as well, but I'll hold off drawing for a second. If you look in the bottom right of the screen, and we have the trading view chart, and you've got yesterday's low, that is not correct. That red line there in trading view, that is not actually correct at all. So yesterday's low, and I'm just looking in Sierra, yesterday's low was for NQ was 15,442.70. 15,442.75, so basically 15,443. So if I draw a line, time to draw again, great. Let's just draw a line, so 15,443. So effectively that was yesterday's low, and you can see just looking in TradingView that we came down, smashed through it, and then immediately rejected, and that since then we've been grinding our way back up through the developing value area to the other side of the developing value. So let's have a look at how this appeared, and let's talk about different ways in which to get this. In terms of this being a valid setup or not, it is a valid setup because it is effectively a spring on yesterday's low, so it falls into category C of the ABC trade setups that we've been talking about for the last couple of weeks. But let's go back in time and have a look and see what we could have seen here. Bear with me because this is always a little bit tedious getting back to the 3 a.m. London Open in ES. Okay, and NQ rather. Actually, it's probably best to bring it up in ES first, even though I took the trade. I actually took a couple of trades within the move back up, and it is better to look at it in ES from one perspective. As we came down, and there's the German Open about 2 a.m. and then the London Open about 3 a.m. And if we zoom out vertically, you can quite clearly see, well, I hope you can, maybe I'll zoom a little bit better. You can quite clearly see that the main liquidity was below. So there was resting liquidity below, and if we zoom right back into where this came in, effectively this came in at this kind of time, which is around about the China Open, about 9:30. 9:30 to 10 p.m. New York time, Eastern time, that they flagged that they might want to transact at the liquidity below. Then if you have a look, so you take step one, ES flagging clear resting liquidity below potential magnetism or magnet down there, and say you want to trade NQ. NQ had that lovely level which we've drawn on TradingView, which was yesterday's low. And It's just something I want to show you before we actually drill right into this. If we and I put these into their own columns. These are effectively 30-minute bars on NQ. So every one of these vertical bars on this TPO chart in NQ is a 30-minute chart. So as we were coming up, we were up here, right? One of the things that is interesting, and it's something you learn with experience with NQ in particular, and that is the one that I trade more of in the London Open session time, that even though, if we were about here coming into the German Open, London Open, and yesterday's low was 40, 10, let's have a look, about 70 points lower, it is still incredibly easy or relatively easy for them to get it down there. So, you might have been fortunate to get a short roundabout here, and you would then have had an overall target, a final runner scale type target of down here because of the behavior of this particular market loving flushing out stops, and one of the best places to find stops is at yesterday's RTH low. There's often a bunch of stops just there, and this was the scenario in this circumstance. So it's just something that does play out a lot. I mean, we can talk a bit later about how we can examine these profiles for other examples of where they might have found stops as well. And it's also interesting to have to have one quick look at this profile before we dig into that spring of yesterday's low. If we have a quick look at the high, which was formed pretty early at the Japan Open at 8 p.m. Eastern time, you'll note that it did not quite take out this pink line, which was settlement and also yesterday's volume point of control in NQ. So so you had a confluence of two key zones there, which often do happen to coincide just because an awful lot of volume is traded at settlement, and it could not get up to and tag it. So this was a failed kind of auction for NQ right at the Asian Open, and then it's basically been moving away with ES towards that liquidity, which was much, much lower. So it's just interesting that you have this clear area here. You've also got a break in the profile just there, which you could argue was a delineation of a value area and another value area, and it basically had a failed break up over that value area and then back down. So it's just interesting that there was a clear failure there, so we moved into trending action, and it was a question of how far could they explore lower, and we were given guidance by the resting liquidity in ES lower down. Okay, right, so let's have a look at some of the nasty games that they played and what you could have done. Right. So the first thing to say is that NQ coming into the we have the 3 a.m. Maybe I'll start using the pen now. Let's start drawing. So bear with me while I try and get this right. Okay, so we've got the London Open here. We have the breakdown there. We also have some nice resting liquidity here, and we'll then move into an iceberg. But what's apparent here is that there is a lot of delta, and it smashes through the resting liquidity right at the London Open. So if we zoomed right out, I think I've got to get that back on cursor to be able to do it. Yeah. You can see it was quite an emphatic breakdown of liquidity right into the London Open, regardless of whether that was at 2:59:30 or 3 a.m. exactly. That was a clear breakdown. You've got a stop, an MBO stop, 131, a huge number for NQ at this time of the day. So clearly interested selling intent. You can see the size of the sells versus the buys. By the way, I've amalgamated these two into one column so I can get it wider for you. But essentially, this is the same as the three columns I had before. I had the sellers and the buyers separated out in two columns, but I've just done it in one here so we can clearly see where value starts and ends. So you've got a value delineation point there, for example, which did play a key role later. So if I just flag in your minds the 15,493.50 as a delineation in the value. So yeah, you could well have been brave enough to be looking for shorts or just correct in this scenario. Let me get rid of that. So the first setup would have been a test back to that large trade, which is 269, that transacted with that liquidity. That was the breakdown, and we got very, very close there. So that there would have been trade number one, right on 306, and the first target would have been this little retest of this trade here, which is 100 into resting liquidity, which also has a buy iceberg. And at the time, they already had about 60 on that buy iceberg. So it was a strong probability, I'd call it, that they would retag it. So they did. So I'm saying that the first trade would have been a retest of that. You could say, I mean, is this an ABC supply demand? Yes, it is, because if we zoom right into this trade and we have a nice little swing high there and we watch the microstructure, it is a type C category. It takes out that little swing high, and it also has strong confluence of the breakdown from the extreme of the previous value coming into the London Open. So that would have been like the best possible trade at that time to take. And right here, so you'd try to get in around about the 86, 87 mark with a clear target of 78. So a 9-point target, probably a 6-point stop, 6 or 7-point stop. When we have this iceberg here and they were filling more and more and more, and you can see with the absorption indicator roughly how much was being filled. You know, you've got 60, 80, 50, so 170. Once you have 1, 2, 3 touches, the probability goes away from this being a demand zone to jumping straight up to being likely that it's they're hammering at a brick wall, and the more they hammer at a brick wall, the more likely it's going to burst through. So after those 3 touches, you could have been very, very aggressive and said, this is a micro swing high, this is the current little value congestion zone, and taken it there as well. So you could have done that with a very tight stop, so getting in about the 83, 84 level, and then going straight down to that resting iceberg. And on this scenario, you might have been conservative and had that as your first scale out point, or you may have been slightly more aggressive and said maybe at least a point or a couple of ticks below that because it will break it. Then it comes back, retests this big trade or cumulative iceberg, and then breaks down. Okay. The danger at this point, as it breaks down, and the low, as I said, was down at yesterday's low is at 15,443. The danger of this scenario is that you see this big move and you might be tempted to fade it too soon, right? And I've done that trap before. I've certainly done that trap more than once. In relative terms to the action that preceded it, this was an enormous move down. So even back here from 15,485 down to about 15,460. So at this point, if you're thinking about fading it, that's essentially a 25-point straight down vertical movement, or as close to vertical as you're going to get in any market. But one thing that I've learned with this beast, the NQ, is that you give it a chance. That when it's moving, when they're showing real intent, give it a chance to get to the most likely scenario of exploration. And in this case, it was the stops under yesterday's low. So it was quite likely that we would get at least close to this 15,443 area. Okay. Um, in terms of MBO stops and triggers, I mean, you've got one right here at the 45, 46. So if you were going to be early and try this as a higher time frame ABC supply demand trade, and effectively a type A, that if the demand, if type B, the double bottom was down at 43, type A would be this trigger here, hitting through resting liquidity. You've got some very big trades there, 100, 100. So you've got about 300 in that zone, and you've got a 63 MBO stop on the volume. On the volume pressure imbalance, you've got a nice red zone. So that would have been a valid A category. Depending on how wide your stop was, if it was a 5 or 6 point stop, you'd have clearly been stopped out. But if you've had a wider stop, especially taking into account the fact that there was a strong likelihood it would get to 15,443 and look for the stops underneath it, you might have had a wider stop there. But definitely, when we then have a second MBO sizable trigger of 34 MBO stops, and we're right at this 15,443 level. So if we draw that back in, so we're talking about right about here. And we see the rejection there. And we can go into the microstructure as well at this point. Let's go back to the cursor. So you've got them looking for stops in this area. They found 34 MBO stops. They did how many? They probably got about 100 in terms of volume underneath that yesterday low. But then you begin to watch that microstructure straight afterwards. I have to get rid of that because it's moved. So they found their stops there. Could they then go any further? No. What kind of transaction did we have at this low, and then what happened next? What often happens, when we've had what is essentially a climactic spring below yesterday's low, is that they'll move away, not be able to get back down, and then they will congest or form a new zone, which later turned out to be accumulation here. And what you're trying to do in your profile terms is to see where that accumulation is, and to get in long at the south side of it, i.e. as far down in this zone here. So if I drew it, if I draw it again, let me see. I'm aware that we're coming up to some news at 8:30, so I will have to stop in about a minute. So you're essentially noticing the congestion zone there, and you've got a swing low in terms of a micro swing low. So that is a category C. And then if we move across, I mean, this is hard to do in real time, by the way. It takes having to experience this and losing as well a few times to really, try and master this whole process. But effectively, you are trying to get into along around the edge of this new accumulation trading zone. So, you're either taking that as a category C or this as a category A type long. And what are you going to be targeting? You're going to be targeting the breakdown at that 93 level. So in other words, if you can get long here, even though we've had this dire move down and it looks for all the money in the world that it just wants to keep going lower and lower, there's a really good target up at that 93. And if we look what happened, I'm going to have to go live now, and we go off to ETS. It went effectively straight up to that 93. I'm going to move on because we have the 8:30 release coming up right about 30 seconds time. Make sure that we are live on this. Okay, I think now scaled out correctly. So we're going to just deviate from the schedule just to have a very quick watch of the US trade balance release. By the way, please feel free to fire in any comments you've got either in the Discord channel or on YouTube, but we're just going to watch what happens with the US trade balance release. On the trading view calendar, this is not a high importance one, it's a medium importance, but let's just see if we get any decent action. And bearing in mind the liquidity is still mostly below. Okay, we've just had 830 and the trade balance actual was minus 65 billion against a forecast of minus 68 billion, so a tiny beat of that level. And I wouldn't say there was tremendous activity, volatility straight afterwards. And if we zoom right into NQ, no, it's not like the crazy non-farm payrolls type activity. So as we've often said with these news releases, the first move is often a fake move. So if this had a little move up and then we gradually made our way down towards that liquidity, the resting liquidity below, that would not be that surprising. Let's having a look at this level here, the 4488 level, which has been there. It's been there since the European session. So it hasn't been there all night, but it has been there for a good while. Anyway, that's relatively slow, which is good. We'll come back to that live trade analysis in about 15 minutes. Okay, next the third quarter of our hour. Here we are. We are beginning to move down. The third quarter of our hour. I want to talk about this being a breakfast session, being preparation to assist you with what might be coming up in the RTH session. That was one of the purposes of my setting up this webinar, which was partly to help people to see the type of action that had been taking place in ETH and to see what was resting by way of liquidity in the market, and also relate that to yesterday's action, yesterday's profile. So yeah, let's start talking context. Okay, let me just drag into this my little trading view indicator that I've told people about before. Okay, so this is just a very quick overview of where we have been in ETH. So VIX would have started about 4:30 a.m. So that is relevant, even though the main VIX doesn't open until RTH. Okay, it's a mixed bag. The German markets and Bitcoin have both been down. They both got a fairly good correlation with NQ, especially. Asia, Japan was up, China was down. The dollars, even though it is fractionally down, it's still up over the last few days, and that's at a strong 104.72. That's the DXY I'm just using for this table, just because it's an easy symbol to get hold of in TradingView. And looking across the currencies, the weakest one appears to be the British pound, which often has direct correlation with the NQ in the European session, and the ES, NQ, YM, and RTY. You can see the confluence or the correlation between the first three. They're all down roughly 0.25 to 0.3%. RTY not down as badly. So just putting that into context, in the overnight session we're down a little bit. Okay, let us have a look at let's have a look at the dailies, etc. I'm actually dragging on rather than screenshots here. I'm doing my live chart so I can zoom in and out for you. So on the ES daily, we've got this uptrend, or these two uptrends that I've been talking about for the last couple of weeks. They are still intact, even though we now looks like we are coming back down towards the most recent uptrend line. That is for ES. This is just to show you that I do have a 15-minute as well. I find the 15-minute really quite good to contrast with yesterday's range, but I am a strong believer in multiple time frame analysis, but I probably don't use it in quite the way that some people do. NQ, which has been stronger than ES, and you can see that It's still, even though it's come down a bit, it's not looking as weak on the daily as the ES and the 15-minute. Yeah, it's coming down a bit, and we are. Let me just have a look at where we are now. Come on, off the screen. Okay, that's one way of getting rid of it. Okay, let's have a look at where NQ is. Yeah, so we're still a little way off yesterday's low, but we've had a good move after that fake little up move on the trade balance release. We are now in a little trend down, exploring downwards on the microstructure. Okay, let's have a look at some TPO kind of action and work out where we are in relation to value. Okay, on the ES, you had quite a nice skinny profile here, setting that high that's taken us onto this down move over the last couple of days. Just for everybody's memory, the white shaded profiles are RTH and the grey shaded profile is ETH. And I'm not showing every ETH one because I find because the ES market is not really open during ETH, i.e. the underlying market, the stocks are not open. One can tend to ignore the previous ETH sessions other than today when you start working out what you want to look at for the upcoming RTH session. But if we just zoom along here, in ETH we've got a nice profile of some value that has essentially delineated from 4495, and yeah, it looks like, you know, if we are going down towards that resting liquidity, we're exploring lower. And if we zoom back in, what is below, we've got a couple of singles on the profile side that may get tagged. We've got some the bars here are all liquidity, i.e. the order book, so you can see there that the heavy resting liquidity around about the 4481 and 4485 levels. So yeah, it looks like they may be able to get down there. Perhaps they'll even be able to do it before the RTH open, and then quickly come across. So basically, just a recap on ES, that we've got a delineation point or resistance point there at 4495.50 as to where the current value in ETH ends in the upward fashion. So if we can get back above there, then we may explore the value up towards settlement. In other words, there is a good chance if we can break 4495.50 properly that we'll get up to settlement, which is up at 4502. But being under that psychological level of 4500 is interesting too. Okay, on NQ, let us just reset that one. Okay, and zoom out. You've got a lovely distribution overnight. There's no break point in the value in the same way the ES had, but there is a ledge up at the 15498, 15500 region. So if they get above that, then there's a good chance that they can tag a settlement, which was up at 15535. And remember, we've got that confluence also with yesterday's volume point of control. So you've got those on the upside, and below them we've got some heavy resting liquidity, which has obviously been there a few days, down at 15343. And you've also got a naked, you've got two things here. You've got a 50-day moving average, that's the 50-day moving average, and you've got a naked volume point of control, and they're both around the 15371. So that's if we had a good down day, good in that sense of good in the sense of having a good range, that there are things underneath 15400 for it to tag, and even some liquidity around about the 15345 marker. Okay, where are we on 6 minutes? Again, feel free to ask any questions, or if I also wouldn't mind any feedback on the revised structure of how I am presenting the 1 hour that I've got. So if you prefer this new format, please tell me. If you hate the new format and you prefer me doing more education and going through ETH setups in minute detail, please let me know as well. Okay. Right, let's get back onto ES. Whilst I am more than happy to trade more, in fact 80-90% of my setups on NQ in ETH, RTH is a different matter entirely. It is a scary beast. You've got to have pretty wide stops, in my personal opinion. And again, it's your trading plan, your trading setups. You've got to decide what kind of stops you want should you trade NQ in RTH. But I found that they can just whipsaw it in both directions and take out as many stops as they possibly can before they get onto where they were going to in the first place. So I find it, if you're risk averse in any way, you're not going to like NQ, particularly in RTH. Okay, so let us have a look. So we've got about 20 minutes to start drilling down into what we can see in ES looking forward. And we've got that profile as well. Okay, so we've got some resting liquidity, which is relatively obvious at the 4485. And if we then get through this zone here, we haven't really got any value. If we break through this area, then there's a potential of, having a decent run till we start forming some good value. Okay. So we have sort of interacted with this resting liquidity at 4488, and we've got the next ones down at 448550 and 4485. Nothing tends to go in a straight line, so we are not expecting it to go straight from here straight down to 4485, but I would not be surprised if that is not tagged, whether it's before 9:30 or relatively soon after 9:30. So let's look at what is on our screen. So one of the things that we have is the outside liquidity market. By the way, we've now got a little mini signal appearing on the volume pressure imbalance, just showing strong delta buying on this little leg up since they put in that buy iceberg. So if we zoom right in, we can see quite clearly, yeah, it's strong buy delta on this move up. I'm just looking across at my time chart to see what it is. If we get into the analysis of the microstructure, I think there is a zone above, up from about 90.75 to about 93.25, that is a value or congestion area. So if we can get into that, then there's a good chance that we'll be in. Where's the pen gone? Yeah, there's a good chance that we'll get back into this previous area. So if I scroll out and see if that stays there, yeah, you can probably see it a little bit better than I've drawn it. So it's really around about here down to there. So it's a question of they're going back up to tag the bottom of that congestion area, which is about 90.75, and then if they get into it, can they explore to the other side of that little mini value or congestion area? That little iceberg that was there has disappeared. It would have been nice to have a little signal there that they were intent on buying. If they were clearly supportive, if we had a buy iceberg around about here that stayed in place and that they added to it to help us drive to the other side of that little congestion area. I'm aware that we've also got something else on the calendar, so if we quickly, since we are doing a preparation for the RTH session as well as this live commentary, yeah, just be aware that we have the Red Book year on year coming in at 8:55 a.m. Eastern, and then you've got two pieces of news, including the most significant news release at 10. So at 9:45 you've got the S&P Global Composite PMI, and at 10 you've got the main piece of news being the ISM. So expect significant volatility in that 9:45 through 10 to 10:30 zone. The only danger with live commentary becoming a little bit dull in this session is if there is not a lot of market movement in ES whilst we're talking about it. So yeah, just to recap, we've explored down to this resting liquidity here. We've had a little mini spring, just one tick lower, and now we're exploring back up to where the next little congestion area is, which is at 90.75 to 93. So it's a question of, can we get back into that and then traverse to the other side? Since it's a little bit slow, we can have a look at NQ as well and see whether that is moving quickly and what's happening. So at around the same time that ES collided with that resting liquidity, we had a lovely bounce on NQ. So with NQ, you often get a retest. That's why I'm saying that the A and B categories can be, just as useful as the spring type C category of supply and demand. And since then, we have been grinding back up a bit. With this liquidity that they place in NQ, I don't hold too much weight on it. It's essentially just the market makers identifying the current bounds. But since this will move every few minutes as price moves, there isn't too much weight that I feel that I can attach to it. So you can see here, it's the same bounds. I mean, the distance between them is 4,485 down to, about 15 points. And so it's just like a 15-point boundary that the market makes. And you can see them, they've just moved it up again. So it's not the same evidential weight or market generate information as a resting large piece of liquidity that might have been there 5, 6, 10 hours. So on the microstructure in NQ, if we zoom in vertically, using Tom's words, let's mimic Tom a little bit here. Once they reached this high, they explored down. They couldn't explore any lower, so price was too cheap, and now they are exploring higher. And if we go back into our ES, see if we're back into that zone yet. We're into the base of this congestion zone here, but we haven't properly got into it yet. So we haven't really got above 91, which would suggest that they might go to the 93s. So at the moment, we are rejecting the entry into that previous liquidity area, even though NQ was quite strong going up there. On NQ, again, I mean, the exploration of this volume pressure imbalance, it's interesting. I mean, in my journal, when I'm going back on this, I will look back to see how useful this indication was, like the green signal there. I mean, you can see that coincided perfectly with a good fade. If you had used it partly because it was in a good area, good setup, whatever it was, and you'd taken it as a trigger, that would have got you, I don't it's the range is too small to trade at this time of the day. That's maybe you could have got 6 points, but that is a lot of risk. So whether you'd even have got 1 hour is questionable, even though we know that the main resting liquidity is below. So we're still trying to get back into that congestion zone above, but we're currently exploring in this little area. They've rejected this price, so they're now going, they've said it's too cheap there, so they're now on the microstructure moving higher, and we're getting back into that 91 to 93 zone. So once they do that, let us see if we can then go to the other side. Okay. It's interesting that they haven't got into it yet. So they've tagged the bottom of that congestion zone a couple of times. They've got the liquidity, which is very appealing below. At this time of day, I suppose I would still be looking at NQ for any quick shorts. But NQ is stronger and leading ES. It seems clear when you contrast the two types of action there, which one is leading. I'm just looking across and seeing some weakness and current weakness in the US dollar. And since there at the moment is an inverse correlation between the indices and that US dollar, that's been helping the NQ on that push up. So we had another little volume pressure imbalance signal. But in terms of where we are, I like to look, one of the reasons I have my short-term candlestick chart as well, is I like to look at areas of rejection, and I find those particularly useful for when I'm looking for my ABC setups in conjunction with the X-ray vision that you get from Bookmap to see what's inside those. So, you've got this swing high here. It has gone up, but I wouldn't really call this much of a rejection yet. And we also know that settlement is well above where we are. Settlement in NQ is at 53450, 15,53450, which is quite a lot higher there. So there is a decent possibility that the market will try and rally towards settlement or try and tag settlement at some stage before any directional move, which might take place after the economic release at 10 a.m. So when we're looking at this as well, if we had a really, really thick band of liquidity in ES, and we were setting up in time terms of coming up to some major economic release, for example, if this band was going from 4485 down to 4480, so like 5 points of heavy liquidity, which it is not, then you might form one theory, hypothesis, whatever you want to call it, that it will not get through and that they are just absorbing the sellers for a good strong move up after that economic release. Here you've got some separation between the bands. So even though you've got the liquidity clearly below, you've got some separation, so it's not as clear in that scenario. So, quite often they can here, they've taken out one liquidity, they bounce, they might come back and take out the next one, they bounce, then they come out and take the third one, rather than they hit a huge brick wall, take as many sells as they can, and then zoom upwards. So it's a different scenario. And that's, when you're looking in ETH coming up to the open, that's why the way that this liquidity is spread out can be useful to help you form views on what might happen. So what I'm trying to say at this stage is that quite a lot of me still thinks that they will get down to this level at some point, but whether they decide to go up and tag settlement first is another question. So we got into that little congestion zone. So we got above this 91.25, and we said that it was quite likely that we'd get up to the other side of it then, which is up at the 93 level. So if you were going to go micro scalping, once it looked like we were hammering on the door of that congestion zone, value zone from 91 to 93, then you could have taken some of these little springs, where it comes down and reverses straight up. So if you had done that, and we have hit that 93 now, in fact we're going up to 93.25, if you were going to do that at this time of the day, I personally would take very tight stops, because the range is not huge, your target's not huge. I mean, if your target had been 93 or 93.25, I think 93.25 is probably the most likely, looking back through it, you want at least 2 points. So you really, you would not be taking more than a point's worth of risk that you shouldn't be, or I'm not saying shouldn't, I'm saying one approach would be that you do not want to take more than a point worth of risk if you're only looking for 2 points worth of target, because I mean, even if you've taken, where's this, the last one here, you've got, if we just make this vertically zoomed in so it's easy to see. So say this is a little spring and it just pops down there. So, and you get in at 91 or 91.25 and you're targeting 93.25, you do not want, I mean, if you can get away with 3 ticks, but no more than 4 ticks to get that, the other side of that little range, that is, that is what you might do if there was nothing better on offer in the last few hours and that met your trading plan. That is something that you might want to do. But again, we're not talking about a huge trade. Just having a look at where we are. I'm also going to just check my room to see if there's any questions there. No, no questions there. Yeah, so you had another repeat of this tiny little iceberg. We had one about 10-15 minutes ago. Yeah, it just seems like they're playing some games here in this, back in this congestion zone. One of the things that ES might do as well is to ride all the way back to yesterday's low. So we're out of range going into the market open. And this period, I mean, the 9 till 9:30 that's coming up, it is a time that they often close a gap. So that there is no gap when the RTH open happens. It's something that I've noticed over the years that I've been watching it. So the idea of a fill the gap can take place just before the market opens as well as during the market. So the gap, where is yesterday's low? Yeah, it's the psychological 4500 is what I have as yesterday's Globex low. Again, it depends exactly on what session times you use. I'm essentially using 1800 New York time to 1600. So I'm kind of ignoring some of the action that takes place in that dead time between settlement, close of the market, and the 2 hours until the Asian Open happens. So that some of my levels may be different to some of the levels that you use or are quoted elsewhere. So we've got a little bit of ping pong going on here between this sell iceberg and the buy iceberg. I would not be trading this. I will have a quick look down, see if there's any changes to that resting liquidity, and to actually note what the level is. It's not huge, 235, and the one below that at 4481 is 290, and then you've got one at 266, 290, and 235. So those are the levels that they flagged. So again, the ideas in my head are that at the moment we've tracked back to VWAP or Globex VWAP, and there's a possibility that they will track back up to yesterday's Globex low at 4,500 and also yesterday's daily low, which is up above at 4501.50 and settlement 4502.50. So that might be very interesting to them. But then we also have the resting liquidity below. But should there be any significant news or deviation in news on those releases at 10 a.m. and 9:55, some of this resting liquidity might just get thrown away completely. It might just suddenly disappear because there's a totally different game afoot based on the content of those economic releases. So you just have to be aware of that one too. Okay, we're coming up to yeah, Darius, you're right. It's a bit of a yawn market, isn't it? There weren't that many interesting games. It was just that tiny 2-point range that we could have traded in ES for a long, but there wasn't really a lot to do. Anyway, I think I'm coming right up to, I've got 30 seconds left. So at the moment, it looks like they're exploring upwards. So, and you've got some resting liquidity up at 4496, which would be maybe their very first target, and then you've got the areas up above that I just mentioned, the Globex low, the daily low, and settlement just up there. So it'll be interesting to see if we grind our way up there for the next half hour. Anyway, thank you for your company, and I will end the stream